What's going on, guys? We're going to be day trading on the Thinkorswim platform. So in this video, I'm going to kind of give you the rundown on how I use Thinkorswim, why I love it so much. Again, not here to sell you anything on Thinkorswim. You guys can use whatever brokerage that you guys want to. But as far as charting, I know a lot of you guys use TradingView, a lot of you guys use Webull, a lot of you guys use a bunch of different, platforms that are available out there, right? Definitely, if you are a trader or trying to be a trader, please do not be day trading on Robinhood. That is going to destroy your career. Now, can you make money? Sure, but for the purpose of this video, I'm just going to talk about charting. Why I like them: I have all my charts set up. Now, I've been trading for 8.5 years, 6 years full time, and I have used Thinkorswim platform the majority of that time. Now, I am also funded with multiple different prop firms. I do have a few different accounts, but for every single one of them, I still use Thinkorswim to chart. My watch lists are set up here. All of my indicators are set up here. My moving averages are set up here. And I'm going to exactly show you how I'm using Thinkorswim to kind of monitor and make these trades. So what we're looking at here is the triple Qs. It's the NASDAQ 100. Why I'm watching the triple Qs is because predominantly 90% of the time I'm trading things like NVIDIA and Apple and Meta in Microsoft. I'm trading the big mega cap tech names. So I like to follow the triple Q. So what you can see here is a ton of supply, a ton of support and resistance levels on my chart. All I'm looking to do on a day in and day out basis is kind of identify where there's potential room that I can get in and make a dollar here, a dollar there. So by looking at the triple Qs today, which is the 4th of May, it's currently 10:30 in the morning. So we just got back from that New York lunch hour session. Market has resumed. Currently, the NASDAQ is flat on the day. So today has provided a little bit of opportunities to the downside. Then we're kind of coming into some support. We're kind of bouncing. The overall market is really not moving all that well, besides the exception of Shopify, which kind of blew out their earnings. They're up over $10 on the day. At one point in time, 28%. So what I would be looking at here on this Thinkorswim platform is I would go to the hourly time frame here, and I just want to kind of show you guys exactly how I use it, right? So if we kind of look here at the first opening hour candle, we put in a high, which was below the pre-market highs. So automatically here, I am not looking to get long off the day. We got rejected at the 5, the 10, and the 20-day moving averages. We never got above this 200-day moving average here. So automatically, even if I came into the day with a long-sided bias, meaning I was looking to trade calls, I've got to kind of put that bias to the side and respect the chart here. The only real trade that happened, or actually two of them that happened today, was that initial opening range flush, cover our position, take a small piece of the pie, and then use that day's low at support for a potential bounce spot. And I'm going to show you guys how to do that. So if we look here at 6 a.m., this is our first hour candle. This is going to include the first 30 minutes of the pre-market data. We can set a low here. We came down to this Bollinger Band. We came all the way down to a price of 315.71. What we would then do is now wait for the next hour candle. So that means 30 minutes after the market has opened, we're going to allow that first hour candle to close. All we're going to do is sit on our hands and wait for that opening range to get confirmed. If it does get confirmed, that's when we're going to take our stab and try to go ahead and short the overall market on the triple Qs, whether you're playing options or you're trading actual equity. So our entry price on this would have been somewhere close to 315.70s. If you can look down below, I've got a channel level here, which is a support, which is a demand zone sitting at around 314.78. So what I'm looking to do here is I'm going to identify, I really only have about $1 worth of room before potentially this can bounce. So what I'm looking to do is treat this as a scalp. I'm looking to get short, and I'm looking to cover my position on the way down. So you can see here, as we start to lose this 315.71, we start to come down 315.40s, 315.16, 315. So you can see here, we've got about 60-70 cents before this quickly reverse. Now, again, depending on your position sizing, is going to depend on how much money you made. Obviously, if you would have taken 100 contracts, taken 50-60 cents, well, then you're probably done for the day. If you took one contract, however, maybe you're only up $20-30 on the day. It's not going to be that much money, and you're going to kind of start to over trade here, maybe potentially get trapped, stop out at break even, or a little bit of a cup of coffee loss. But what we can do here is we can do one of two things. we can take this short position, understand that we do have demand down here, take 30, 40, 50 cents off the index, and then kind of just cover it up for quick cash flow off the morning, kind of give ourselves a little bit of a cushion. Then what we can do is, obviously, since we never broke below this channel and we started to aggressively wick back up here, what I would then do is use this low, or even use this bottom demand zone at around 314.81 as my max pain, and I would go ahead and flip my bias and go long. I would try to bounce this off of demand. When we are trading in the range, when we're not, trending higher each day, and when we're not trending lower each day, it's what's called a period of distribution, where at supply, you need to be selling, you need to be covering in the middle, and then when we get down to demand, instead of trying to short those new lows, what you need to do is buy and then play it back up into the middle of the range. So what we could do here is use that 314.85 as our max pain. That's our stop loss. We can get in long on this sort of high wick here, right? And then you figure you're going to get in somewhere around 315.50s. This came up to a price of all the way of around 316.60s. You would have made $1 in less than an hour. If you would have held that position, you would have went back into a little bit of drawdown, or even break even back down to 316. And then you can see here, this 8 a.m. candle really exploded through the 5 SMA all the way up to the next supply zone here at 317.44. So essentially you could have made $2 on this overall move. So if you would have treated the first one as a scalp, understood that you maybe only had 80-90 cents worth of potential downside reward there, you could have taken that scalp, took some cash flow, used the low of day or the bottom channel as your stop, rode this back up on calls. Again, this is all going to come with a lot of experience. A newer trader is not going to really be able to identify this, especially if you're not trading the way that I trade or using my strategy. You're not really going to understand it. You're going to look at it as, this is very, very choppy. But what we have to do here is we have to respect each demand zone. We got to respect each supply zone. So as we approach into an area of supply, that's why I said, first we would have probably sold somewhere around 316.60s, because this did not have to confirm the 5-day moving average and push up to the 10. So we got to take profits here. We've got to let it pull back as long as we don't make a new low here. Once we reconfirm and get over the previous hour candle, then we can take another stab here between 316.76 and around 317.30. So there was another 75 cents there. So potentially 2-3 trades that you could have taken all would have been profitable. You would have had to sit through a little bit of drawdown, 10-15 minutes at a time. But again, as long as you get your chart set up properly, and as long as you understand your strategy and you understand how much you're risking per trade, you can do this on a day in and day out basis. If you're interested in learning how to day trade or learning how to add supplemental income to your overall 9 to 5, or maybe you want to go full time and start trading, you need to learn a process, you need to learn risk management, you need to work with a coach or a mentor and get involved in a trading community so you can trade with other traders who are doing the same thing that you're doing each and every single day. Make sure to join the Discord. That link is the first link down in the description box below. If you guys are looking for a coach or looking for a mentor and access to my courses and my strategy guide, make sure to visit evolutiontraders.com, where you guys can become a lifetime member to that online community, as well as get lifetime access to those 2 video courses, over 4 or 5 hours of video lessons that you guys can go through on a day in and day out basis. You guys also get access to me one-on-one. We can do Zoom calls. We can do daily live trade recaps. I also call out the stocks that I am personally trading. Again, you do not have to take these plays, but you can kind of learn along the way. With that being said, I hope you guys all a very, very good end of the week. Hope you guys are all profitable. If you're not, reach out. I can definitely try to help as best as I can. But with that being said, make sure to like, comment, and subscribe, and I'll see you guys all in the next video.